what is going on in the markets, similar to what's going on in markets everywhere, Brian. And this is a huge change that we're seeing in the crypto markets. They are now acting like macro assets, high risk macro assets. 4 years ago, back last time we were in the sort of on the cusp of a crypto winter, they had a very different narrative. They were very divorced from the traditional stock market. That's not the case anymore, which is a very interesting narrative twist.
I promised the viewers a little bit of maybe not good news. I don't want to quantify it that way, but maybe comforting news. And that is some data that you have got. And while we have seen the price of Bitcoin fall considerably, your data suggests, or data that you look at suggests, that the number of people actually getting rid of their Bitcoin is not that high. Explain the difference and maybe, Noelle, some of the disconnect there.
That's a great question, Brian. And you've hit on a very interesting story that is unfolding in crypto markets. And I'll talk about Bitcoin here because it's still the flagship crypto asset, one that most of your viewers at least are somewhat familiar with. Now, we have been hearing over the years that Bitcoin is digital gold. It is a store of value. It is a hedge against inflation, et cetera, has not behaved like that in recent months. Reason being because many of the new types of investors coming into the market came in because Bitcoin is a risk asset with high volatility, potentially very high returns. And when they treat it like a risk asset, it behaves like a risk asset. Most of the selling that we're seeing today, Brian, is from short-term holders, people that either bought in at the top with very low conviction, or these macro investors that I am talking about, the ones that see it as a risk asset. And when the market signals to go risk off, Bitcoin is going to get hit. It's worth remembering that Bitcoin is the only asset that trades on the weekend 24/7. So it's pretty easy to get rid of it then. Yeah. Now, here's the interesting story that you mentioned, Brian. That only accounts for about 20% of Bitcoin's supply. Long-term holders, that is accounts that have held Bitcoin for 5 months or more, they control almost 70% of Bitcoin supply. 75% of Bitcoin supply are held in what are known as illiquid addresses. The supply of Bitcoin that has not moved in over a year is almost 70% also. And all of the signals that the thesis that Bitcoin is a store of value, a long-term hedge, that has not gone away. That is still very strong and accounts for most of the holding that we are seeing. It's just not what we're seeing in the market.